The traditional kind of way that people want to solve under-saving and things like that is to get people to change their behaviour. But our idea is to make saving as simple as spending. We want to take the behaviour you already got, spending, and turn it into saving and investing. We're just over 3,000 active users at the moment. You're doing about $2.25 million of extra contributions a year at the moment. So you connect your bank account, we look at all the transactions you're doing. You can round up to nearest $1, $2, $5. We calculate that and then initiate a payment from your account and put it in your or your loved one's KiwiSavers.
Today, Mark from Feijoa, let's get straight into it, mate. What does Feijoa do?
So Feijoa, we're an app to help you save and invest more in a really, really frictionless way. We don't want to put any roadblocks in what you want in saving and investing. We want to take the behaviour you already got, spending, and turn it into saving and investing. So our idea is to make saving as simple as spending.
So first cab off the rank is going to be helping people round those transactions up so that your spend then becomes partly an investment as well?
Yeah. So we've launched, been about 6 months in the market with a roundups product. So you connect your bank account, we look at all the transactions you're doing. You can round up to nearest $1, $2, $5. We calculate that and then initiate a payment from your account and put it in your or your loved one's KiwiSavers. And that happens every day. So every day you're getting somewhere from a few cents to a few dollars straight into your KiwiSaver, and it adds up to our average user's doing about $1,000 a year, $2.60 a day extra into their KiwiSaver. So yeah, it ends up being quite powerful.
Well, I had a play with it many months ago and was impressed to the point where then when I saw you were doing a funding round, I said, righto, I would like to be an investor in this. So full disclosure for those listening and watching, I am an investor, a very small investor, I will say, in Feijoa, because I'm really keen to see where you guys can take it, but also just really align with what you're doing. So how many people are using it now?
So we're just over 3,000 active users at the moment. So those are people who've signed up and actually transacting through the platform every day, and they're doing about $2.25 million of extra contributions a year at the moment. That's the run rate. And we've got about 5,000 who have started the process of signing up. Well, another 2,000, so 5,000 total who have started the process of signing up and onboarding at the moment. Yeah.
Far out. So 5,000 people have downloaded the app. That's the process, right? I went to the website, then I downloaded the app. The app runs in the background. It would give me a notification each time I'd done a roundup. I'm a no notification guy. Eventually I said, I don't need those, just do your thing. And now it's just working in the background for me. And it's rounding up my transactions and deploying those roundups daily, minus your guys' fee, of course, into my KiwiSaver fund. So I'm with Generate, and then it goes to Generate. So if I go to my IR, I can see it go into the IRD, a daily amount, and then that pushes over to Generate, and then they do their thing.
That's right.
Yeah, so that's as simple as it is, basically.
So no change to how you save or spend, right? So you keep your existing bank account, your existing cards, and however you like to spend right now. We even work with like the Sharesies debit card and things like that, and keep your existing KiwiSaver scheme, so you don't need to move your money anywhere. So who you already trust is who you keep using. So that was really important to like take away any of that friction of moving how you spend or save, because that's a big thing that stops people actually using some of the cool tools that are out there.
So far, how much has been rounded up into people's KiwiSaver?
As of today, we're just under 600,000. I think we'll hit 600,000 this week. So $600,000 extra that wouldn't have gone to KiwiSaver.
So that's basically you're really just getting going. So per quarter, if you extrapolate that out, looking at $2.5 million at the moment that's going into KiwiSaver that wouldn't have gone in there.
Yeah, that's right. Yeah.
I suppose the big question is going to come from people, especially watching and listening, is okay, great for KiwiSaver, but I don't like KiwiSaver. I'm already putting enough into KiwiSaver. My employer's just increased my contribution. They're going to be itchy to know, will this extend beyond KiwiSaver at some stage?
100%. So that's the question we get asked more than any other question is, can I put it somewhere other than KiwiSaver? We know that, lots of people don't want to lock their money up until they buy their house or they retire. So we're working on that right now. What we're trying to do is make it as frictionless as we made the KiwiSaver process. So with the KiwiSaver process, we don't need to do any AML on you. So you don't need your power bill or anything like that. It's a really simple process. And we want to make sure there's something as simple as that for going elsewhere. So we're looking at going into your managed funds. So, whoever you've got your managed funds with, go into that, potentially ETFs as well as bank accounts and things like that. Well, the ultimate plan is to get a kind of wealth automation engine in the background that means you've always got the money you need to spend when you need to spend it, but your emergency fund's being built, you're getting your $1,000 or $1,043 into KiwiSaver to get the government contribution, then you're building your long-term wealth in your managed funds or your ETFs, and potentially, saving for your holiday or something like that as well.
So that's the vision, right? What I'm picking up is basically like automating ways to build wealth, because we're so in tune and being conditioned to spend. We're very good at that part of it, and it's become so easy to do, and then going into debt to do it, and just that's become magnified. But this is almost going the other way, that, okay, if we're going to, have to try and fight that tide, instead of trying to fight it, let's almost go with it, but then find a way to then use it for good or for the future. So eventually, are you saying that I'll be able to spend, and I might then be able to deploy some into my KiwiSaver, some into, say, an emergency fund, some into a managed fund? I think my suggestion had been, can we get it carving down the mortgage a little bit faster for some people? So all of that's sort of ahead of you guys. You've just got to start somewhere and go from there.
And we picked KiwiSaver because it's the biggest financial product in New Zealand, like 3.4 million or so people in it. There's like 1.6 million who don't regularly contribute. 1 million of those would get the government contribution and don't. So we kind of identified that really early on as a really compelling story. That 1 million people, right, they're getting an instant 25% return on every dollar that we round up for them. So that becomes really powerful.
Yeah, nice, for that first $1,043. So are you having active conversations with the different share platforms to start explaining, hey, we want to take this down this path?
Look, we're part of our kind of business plan and go-to-market plan is we want to build the partnerships with fund managers. We already started it with the KiwiSaver schemes. We've been around, I think, spoke to just about every scheme and said, hey, we're here, we're coming. This is our process. You're going to start seeing these little amounts coming in. Want you to be aware of it. So if your customers call up, you can say, yes, we understand, we're aware of it. And then the next phase is that kind of managed funds phase. It's kind of where we see the next step going. So building those partnerships with the fund managers as well, so we can get you.
Too many of us signed up to a KiwiSaver plan without much thought. And signing up is great, but if you've never got advice before, you could be missing out. Your KiwiSaver account could become one of your biggest assets over your lifetime. That's why getting expert advice early and ensuring you're in the right fund is so worthwhile. Generate have a team of KiwiSaver advisors available to help. Head to generatekiwisaver.co.nz/change to book a no obligation meeting. They can even come to you. A copy of the product disclosure statement is available at generatekiwisaver.co.nz. The issuer of the scheme is Generate Investment Management Limited, and of course, past performance does not guarantee future returns.
So, question for you, and this is a selfish one. I had my main bank account, signed up to it. Can I have multi-bank accounts?
Yep.
Okay. I've just got lazy and haven't done that
yet. As many bank accounts as you want. So, personally, I've got my main bank account with ANZ, and then got a KiwiBank credit card and that, and I've got it all just linked up.
So you can do your debits and your credit cards as well?
Yep.
Okay.
We don't take the money from credit cards, so it has to be from like a transaction account. So there's no cash advance fees, basically.
I see. Yeah. So how does that work? I tap my, say, credit card if I was to use one. It rounds up the transaction, but then the roundup comes out of my bank account that it's matched up with that card.
So everyone selects a funding account. So that is that's where we initiate a transaction from, which then flows through the Feijoa system and into your currently KiwiSaver and in the future, like managed funds and things like that.
Yeah, cool.
But it doesn't matter. Credit cards work, debit cards work, basically anything through just about every New Zealand bank and some other platforms as well.
So I think I was reading maybe a couple of months ago, maybe even less, that you're at 2,000 active customers. So to go 2 to 3, there's a 50% increase in less than a couple of months. Is that right?
Yep. We're growing pretty fast. So we've got double-digit week-on-week growth. We've maintained that pretty much since we launched, which has been really exciting. So, like part of our plan was we'd seen similar things overseas, and we knew that it was something that worked overseas. That this kind of behavioural stuff worked really well. Like the traditional kind of way that people want to solve like under saving and things like that is to get people to change behaviour. But we saw these kind of tech tools showing up overseas, and we decided we wanted to build ourselves a tech tool to not change people's behaviour, but use the behaviour that's already there to help them have a really good outcome, which is building that wealth, which then snowballs into, getting the compound growth and passive income and things like that through that.
Nice.
So, yeah.
And the app starts to predict out if you were to contribute daily the same amount in your type of fund based on the rules of the FMA, I believe it is, with the percentages they allow. So say it's, for example, what I'm trying to explain to people is that you might be in a high growth type fund, but the max that you're allowed to suggest that may grow at would be 5.5%, which is probably lagging behind the reality of the market at the moment. Obviously, that's a long-term guideline of 5.5%. And so then it's mapping out, okay, if you were to contribute or round up each day that same amount, here's what your amount would be at 65 when you can then access that in your KiwiSaver.
Yeah. So we do that. Like, it's really powerful to understand the impact of what you're doing. Because I think when we were going through our beta and talking to our original beta customers, what was really powerful for them is, they'd see these, 50-cent transactions coming out, and on a little notification we can pop up, you bought a coffee for $4.50, 50 cents is rounded up. That will grow into $4 by the time you retire. And people were like, that just paid for my coffee then. And, it's a really powerful thing. So then we've got the chart and it's a little bit more conservative than the FMA calculation, actually, because we're basing it on expenditure, not income. So our hope is that, you kind of get that widening gap between your income and expenditure as your income grows. But it's essentially that same formula, and 5.5% on the aggressive funds, 4.5% on growth and things like that. But it's we do it on the median contribution you're doing, so which is about $2.60 for average user, which is about $1,000 a year.
And how do the fees work on the roundups and the product that you've currently got in market?
Yeah, so we charge 0.5% of the transaction. So we're kind of comparing it to PayWave. So it's that kind of convenient service fee kind of equivalent is how we've kind of based at the moment. We know it's a barrier to some people, and we do want to lower that over time. So we're working on, as we grow and as we get scale, then that's one of the things that we're going to look at and lower that. We're also trying to lower it through entering into partnerships with some of the financial institutions. We launched one with Medical Insurance Society, MAS, just over a month ago, and so they fund Feijoa for their customers.
Nice.
So we're looking to set those partnerships up and help people get in and save more with none of those fees there if we can.
Because the KiwiSaver providers and eventually the fund providers, or wherever you go with this, should benefit from it or like what you're doing, because you are then encouraging the customer to engage with their service even more, and if they're charging them a fee. So what you're saying is then that some of those bigger groups are then looking to help subsidise their customers using the app, because they're going to be winning long term.
It's win-win-win, right? So the user gets a cool new tool that helps them save more that they wouldn't otherwise. The fund providers, they get extra funds under management, so they usually charge fees on those funds, so that helps grow the fees they're getting as well. And we obviously get to stitch that all together, but it is quite powerful, right? Because our average user is doing about $1,000 a year, and in KiwiSaver, it's people, an average kind of salary earner will do about $3,000 to $4,000 a year. So it's kind of that 25% uplift in terms of contributions a year. So it's a really meaningful amount, which attractive to fund managers and things.
Nice. And you guys are out there then getting this going from idea to beta to sheesh, this works, to then, okay, we need to scale it and we've got something here. So talk to us about a funding round and how you've then got to go and try and get some resource, that being investors' money and connections and things, to then go, right, let's get this in front of even more people, because we know it works and it does good stuff. Yeah.
So our biggest challenge has always been telling people about us, right? So we were 4 founders basically who sat down quite a few years ago now, in about April, May 2023, kind of sat down and we were like, we want to do something in KiwiSaver. That's kind of the original story. And we had this crazy idea of how do we kind of build this product for non-financial services businesses. And what became Feijoa was a tool on top of that, basically a funnel to make that attractive to those businesses. And we kind of built that because it was the easiest thing to do. showed it to a few people and people really liked it. So we tidied it up. We decided we wanted to give it a go. Took then about a year to solve the regulatory issues and build the platform, get it all working. Me and one of the other co-founders then left our jobs to give it a go full-time about last year, and we launched in September. So kind of got all the way through that idea development, solving the regulatory issues, starting to have those initial conversations by kind of bootstrapping it ourselves. And then once we got to market, we knew that we needed to tell people about us, and that was kind of beyond our means to do. So we wanted to raise capital to do that. So we went out early this year with a capital raise, started talking to people with that plan of let's raise some money, push a lot of it towards marketing, get our story out there and get that kind of growth engine going. Because it really is about, how fast you can grow to get to a revenue position, which then the business becomes self-sustainable.
I think there's a good lesson in here too for anyone that's looking to do fundraising or really cares about something or get something off the ground. At some stage, you've got to then go and show people what you have, see if they care about it, and then basically ask for money. I think it's almost like anti-Kiwi to talk like that, but that's basically what the charities do, and people looking for fundraising, but also the same thing in a business concept where you need then resource. It's no different for someone getting a loan from the bank. Basically, this is what I'm doing. Do you care about it? I care about it. I'm going to make it work. Will you lend me the money to do it? So you guys are just doing it, but doing it a different way, where instead of getting bank funding, you're going, right, here's what we're building. Here's where we think we're going with it. Here's some projections, etc. Here's an ability to invest into it, and you take shareholders along that journey.
It's the same, right? Like if you need a truck for your business, you need capital for it, whether that's debt or selling equity to get it. So, capital's kind of that driver of business growth. You need it to grow, to either have another service or, in our case, push it to marketing and get that word out there. We need that capital basically to grow. Otherwise, we've got a cool little business and we can get something and the organic growth will hopefully grow, but it's a long, slow process. So the capital helps us accelerate that and get to a place where we've got a self-sustaining business a lot sooner.
How much have you raised so far?
We're just under 750 grand we've raised so far, and we're looking for $1 million total. So
nearly there.
Nearly there. Yeah.
And I think you've got you've got 250 available for potential investors if they do want to look at getting involved, but they've got to be a wholesale investor, most likely.
Generally a wholesale investor. They're under who you can raise money from if you're not a listed company and you're not throwing out massive expensive prospectuses and things like that. You're relatively limited about who you can accept money from. So generally it's a wholesale investor, and that's basically people who do it for a job or who have a significant amount to invest. There is potentially an option for people who don't fit that if they've got a relationship to the business or a special kind of circumstances. There's a small category under that, but it's one of those funny things. It's actually hard to give some people an opportunity to invest in a company like ours.
Because they might have the means to do it, but they might not quite meet the wholesale investor requirements. People can go and Google those if they do want to explore the wholesale investor rules. I don't want to get them wrong or get into that rabbit hole. But it's normally like a level of assets or understanding of what you're getting yourself into. It's there designed to protect the public from getting into things that they don't truly understand the risk of. I would say is like an overall piece, right?
It is, and it's also because we don't have the resources to do a full prospectus. So it allows us to do kind of a short form capital raise where we in our one we're doing it a bit different. We haven't actually produced it's called an IM, right, which is basically a sales document about where we want to go. We kind of just opened up with our internal documents, like our internal business plan we're working to as a company, our internal financial models, which kind of drive where and how we're spending. So that's how we've done it. So we've done it a little bit differently, but what that isn't is what is a formal prospectus under the Financial Market Conduct Act, which is where you're disclosing certain things to anybody who wants to raise it. So any company on the NZX, for instance, has one of those sitting in the background, and they have to prepare that to actually offer their shares to the public.
Most Kiwi don't have a financial plan, they have a she'll be right mate attitude. Amy from Leverage is helping KTC listeners change that. If you're needing direction, clarity, or wondering what your next financial move should be, then book a call with Amy or download her free DIY financial plan to freedom. To do that, visit financialplan.co.nz. Have you been surprised at how easy or hard it's been to raise the money for an idea like this in New Zealand?
It's been both easy and hard. Like, we actually tried to raise money first time before we launched, under what's called a safe note. You know what that is?
It's explain to the listener.
Yeah, it's a simple agreement for future equity. It's basically, an investor would give us money, but we wouldn't give them shares yet. And you give them shares later when you do like a priced round. So when you offer shares for a price, they then get some shares at usually a discount or something like that to the price for the extra time they've gone in and the extra risk they've put in. So we tried to do that. It was a bit hard. I think the people we were talking to weren't quite right for that model. So we didn't manage to get it off the ground. But what did happen is one of the people we were talking to, after we kind of pulled that, came to us and said, hey, I still want to invest and I think your company's worth, he said, $5 million. And we said, yeah, okay, that works for us. And so we pulled together and did another round at that price. And that's been successful. A lot of work, like I've been sitting down and meeting investors for like 3 or 4 months now, talking through what the vision is, what the dream is, where we see our strengths, where we see our weaknesses, all that kind of stuff. So it's been an interesting process. What's been cool though is just is how once you kind of get the word out there, how many people are keen to see you succeed and do it. It's you kind of tell them your vision. We get no's and we get people saying no, but a lot of people it's like, yeah, I really like that idea. I'm willing to back you and give it a go. Most of our investments are relatively, they're not like hundreds of thousands of dollars. They're in that kind of, 50 to 100 kind of level, but people willing to kind of kick that in to give it a go. It's been really cool.
Nice. Any hard work investors like me?
No, nobody's been hard work. Everyone's been really positive. What we're getting a lot of as well is people coming on board and then going, how can I help?
Yeah, cool.
So we have been a bit picky about who we've been bringing on board. Those kind of people who've got connections, want to see us succeed, want to introduce us to people. We're based in Wellington and I'm up here for Meet You and then for a few other meetings. And one of those meetings tomorrow, I'm meeting a new company that one of our investors has also invested in. He's like, go meet this guy. He's built a company based on like these financial institution partnerships. So it'd be really good to talk to him about his lessons he's learned. So awesome. That kind of community is starting to get going now, and that help that we were getting, but now we're getting in a better and bigger way is really cool.
It's funny because I think we do have like a big tall poppy culture in New Zealand, but at the same time, once you surround yourself with the right people, you realise that there's almost a complete reverse of it, where people are like, oh, you're doing, oh, mate, how can I help you? And they're just like rooting for you and trying to connect you and find the answers for you.
Yeah. No, it's cool. It's there's just heaps of help out there, right? Like that's been the biggest lesson I've taken from a startup, like just asking for help and people saying, yes, how can I help? Like before we launched, we probably spent 2 years with a reasonably senior kind of governance guy who's been on a bunch of boards and chairs of boards on the NZX and things like that, who basically sat down with us every couple of weeks, talked us through kind of our ideas and helped us kind of come up with the business around our kind of tech idea.
Yeah.
He didn't do it for anything, right? We'd go around to his house and he'd give us a beer and we'd sit there and we'd chat, and he never got anything back. I think he just liked helping out people who were giving it a go, who had an idea, who wanted to try something. And there's been a lot of people like that, right from day one, people who are like get stuck in and introduce us to people, set up connections. It's been amazing, yeah. And that's the cool thing I think about New Zealand, right? Like everyone's only 1 or 2 people away. So, yeah, it's I've been in the room with telco CEOs and CEOs of financial institutions and things you just wouldn't get overseas. So yeah.
Cool. I like when I catch up with you guys, just how passionate you all are about it as well. Of like, okay, you've got that almost like that naive enthusiasm of like, let's just get this in front of everyone. And I mean, it's easier said than done, but you've almost like you've got to have that energy when you're starting something, because a startup requires a lot of energy, and cash is a form of it, but you can't, like, cash misdirected or whatever is still not going to matter. You've still got to have a vision, be able to sell that vision, talk to people about it, and that requires actual human energy.
I think that vision is critical. Like, we're not just, it defines what we're building and why we're doing it. Like, we spend a lot of time kind of talking about that story in our really early days. You know, we initially kind of identified, we called them the missing million, those million people in KiwiSaver who aren't contributing and missing out on the government contribution, and trying to understand why they weren't doing it, and what the impact was, and how we could help in a really frictionless way. And that kind of vision defined a whole lot of how we wanted to make it simple. And we've obviously grown since then, and we, you know, our market, we think, is a lot bigger than that. It's anyone who wants to better their financial situation, which is pretty much everyone, and we want to build the tools to help do that. But yeah, that kind of, how do we help people get there, was really important. And we kind of identified that it wasn't that people don't want to, it's that people are afraid or don't understand, and it's that those when those tiny points of friction are just enough to go, I just won't do it today. So, you know, I'm just a little bit scared and a little bit nervous, and this one thing's popped up, so I'm just going to put it off for today. And that put it off for today happens every day. So we wanted to solve those friction points to just make it really, really easy, so that when that kind of confidence pops in a little bit, you get it over the line, and then you're done and you're set, and you can just let it roll on and grow and grow and grow and grow and grow.
Well, I think, you know, going from no customers to 2,000 to 3,000 and doing that last 1,000 very quickly, you're now getting to the stage where you're starting to get, you know, you guys, the brand's getting recognised, and you guys as founders are getting recognised around the country, I hear, every now and then.
Yeah. Had a guy in the airport this morning. You know, we're just waiting for a coffee, and he pops over and he's like, "Excuse me," and I'm like,
"Here we go."
Like I always do when a stranger comes and talks to me, that little panic happens, and he's like, "Just wanted to say I really love your app."
Awesome.
And it was just awesome. Had that a few times. Like, we do with the branded stuff around all over the place now, and some people are noticing us and saying hello, which is really, really cool. The best story, I think, though, was about a month after we launched, and we're up here in Auckland for a bunch of meetings, getting around some of the schemes and things like that. We're sitting in Commercial Bay, you know, down near the waterfront, and just having a rest between meetings by the elevators, and we're sitting there, and we hear Feijoa. And we look around, and going up the escalator, this guy's like fumbling, and he pulls out his phone, and he opens the app, and he shows it down to us, and he's like, "I love it." And Ben, one of the co-founders, jumps up and he goes, "Oh, send us a message through the app, and we'll throw $5 into your KiwiSaver." So he did. He messaged us, and his story was he hadn't heard about us, but his father-in-law had come round to him and his partner's place. And we'd had, like, on the first day we launched, we had a couple of articles, one in the Herald, one and stuff and things like that. And he had cut out the article from the Herald, took it round to his daughter's place, and stuck it on the fridge. And he basically said, "I'm going to check every day until you two have signed up for this." And, like, this guy was skeptical. It's like,
another app.
Don't want another app. But he downloaded it, and he's like, "Oh, it was easy." And I'm like, "I'm actually doing it, and I know I should have been doing more of it, and now I just don't need to worry. It's like helping me get started," right? And that was really cool, right? So, yeah.
All right. Fantastic. And what are some of the use cases that you guys are seeing with it? Because when I first downloaded, I thought, you know, if I had children, for instance, you could split out, say $1 comes in, you can actually split that out between multiple people. All you need is their IRD number, so that it's then going to their KiwiSaver, then onto their provider. So if you had children, for instance, or you could redirect that to your partner who may be on parental leave, for instance, and then their income is decreasing. I think I've heard you guys talk about grandparents doing it for their kids, all sorts. So, like, has it gone in different directions than you had thought?
Yeah. So we have like 3 really strong cohorts. So there's the first home buyer cohort, right? So that kind of mid to late 20s to mid 30s, and those are the people who are just trying to save as much as possible in the easiest way possible and get that first house, right? So that's a big cohort we got working really well. Next one is like mothers like over 45. And I think that the story there is it's, hey, the kids are a bit grown up now. We're a two income family. We're doing pretty well. We just want to make sure that that kind of the goodness that we're having now financially carries on.
Yeah.
So that's a really strong cohort as well. And the third biggest one is actually grandparents.
Wow.
So these are people who aren't in KiwiSaver themselves anymore, but they're gifting it to generally grandkids, but sometimes kids as well. And, you get 4 or 5 grandkids on it, and they're, getting, each of those kids might be getting 30, 40 cents a day. And, for a 5-year-old, that's going to add up to tens of thousands by the time they go to buy a house.
So can the grandchildren track that or see that as well without having to contribute?
We are bringing in that feature.
Okay.
So, that's on our roadmap.
Yeah.
Not quite there yet, but we've got it. You can set it up so it'll email them at the moment, but we want to bring it into the app as well so you can track it in your app.
And speaking of roadmap, are you able to let us in on any other things that you're thinking of doing or that you would like to bring to life?
Yeah, we got a big roadmap, right? So I think we talked about it before with the new destinations like managed funds and savings accounts, and as you said, hopefully help bring the mortgage down as well. So there's the new destinations. We're also gearing up to launch insights. So part of the process we work is you give us access to your banking data. So if you opt into it, we'll be able to kind of surface some insights about where your money's going, where you're spending, where you're earning it from, to help and compare it to other periods. So you can see, hey, I've had a spike here in my fuel bill, for instance. Why did that happen? Oh, that's the war in Iran. Something like that. Also, we're looking at bringing in new tools for how you do it. So like monitoring on income rather than expenses. And the goal there is to kind of help self-employed people, because self-employed people do contribute about half the rate of the general population. So, start giving tools to make it frictionless on the self-employed. And the other big one we're working on is to bring rewards in. So, there's a lot of brand spend and loyalty spend in the country, right? Like the big brands who spend on attracting and retaining customers. We think it's a great idea what better way to attract and retain a customer and help them with their future. So, imagine a hardware store, helps build your first home with the hammers, but also helps build it by contributing to your KiwiSaver. So we're working really hard on trying to get some of those partnerships going and start getting money from that kind of brand loyalty spend to be invested.
Interesting. So is that kind of, instead of a cashback, for instance, or a voucher, they are contributing to your KiwiSaver or say a managed fund maybe in the future, instead of providing reward credits or whatever that, or discounts in the future. Interesting. Yeah. Nice. Yeah. Well, mate, I'm sure that you'll have a lot ahead of you to sort all of that out. Talk to us about how this idea came around. We spoke earlier about back in 2023, I think it was, but then bringing in other co-founders, because it seems like you need resource to do the marketing side of it, but it seems like you've got a good ability to do the build side of it and not need too much for that.
Yeah, no, we because we're 4 co-founders, right? So we actually had quite a dream team. So my background's like legal commercial. So I've been like a lawyer doing commercial enterprise sales, M&A, finance for my career.
Yeah.
Ben, one of our co-founders, he's been like a financial markets professional, so worked in the financial industry for his career as well, and helped build out the kind of technology side of it for a lot of the existing financial institutions. And then Jared and Sam are our 2 developers. So Sam's a cloud and platform engineer, so he built the Feijoa platform, which is what runs in the cloud and connects to your bank account, monitors it, processes it, initiates the payments, reconciles that, and then sends it onto your KiwiSaver. And Jared's a front-end developer, so he built the app as well. So we kind of, to build the product, we had pretty much the skill set we needed. We didn't have to go and spend like a lot on lawyers to kind of document it and do that, or how do we actually build the money flows and things like that. We had that kind of in-house with us 4 founders. what we identified early on was our biggest weakness, was how do we get the story out there?
Yeah.
So basically from, I think by the end of 2023, we'd spoken to a design agency for how do we tell this story? How do we get it out there? And that's been like kind of core to our build process as well, is that storytelling, and that, how you get the story out there, how you tell it in such a way that's compelling, that, doesn't put people off. Because I think it doesn't really matter how good your tech is if people don't understand it and can't see it and don't get excited about it. So how we package it up and get people excited about it has been critical.
Nice. Well, I just come up with an idea. Why don't we get people who are using Feijoa, or once you sign up and get going with it and understand it better, if you chuck something up on your personal Instagram, tag Feijoa and tag Keep the Change, and I'll kick in a $500 giveaway to somebody who does that. So we'll be able to see how many people are actually listening this deep into the podcast after 45, and we'll see if that's a good organic way to have users of it. They're telling other people about it, and we'll add a little incentive to wire someone $500 and they can do what they please with it. Might go into their KiwiSaver or managed fund, or off to the NRL grand final, or who knows.
I'm sure we can do something similar, match that or something.
Perfect. Okay, now we've got up to 1,000. Game on. Talk to me about the FIRE movement and how much this may have been inspired by that, and what you guys understand of that space as such.
Yeah, so I'm one of those people who actually read about FIRE like 20 years ago and decided I wanted to do it. My kind of reasons for doing it was I was working in a law firm at the time and was like, I'm going to burn out at some time, but I'm making good money now, so I've got to kind of save and invest as much to make sure that doesn't happen. Fortunately, I didn't burn out, but what I wanted to do and identify at the time was, you should be able to build a portfolio that helps take away a significant chunk of your living kind of costs, right? And once you hit that point, that freedom just opens up to do what you want to do. So part of my circumstances why I could afford to take time off to build Feijoa was I built a portfolio to get me to that position. So kind of in the Feijoa DNA, I think, because that's something that's been in my DNA for like 20 years. I started off investing in smart shares back, I think they were called way back back then, when you had to start off with, I think, a couple of $1,000 in each one to
people don't realise how good they've got it now.
Yeah.
They complain about the fees or which platform to choose. I think, shit, man, like you needed $1,000 and you're getting pinged with a $30 fee to buy.
That's right. That's right. Yeah. The brokerage fees on it as well were crazy. But I started that so long ago, and that formed the base of 10 years of my investing, and I just kept pushing it up and up and up. I started to get addicted to watching watching the numbers go up on the spreadsheet, which is a good thing, I guess, because it helped get some really good outcomes. But
what's the crux of FIRE for like those who don't know?
It's financial independence, retire early. So the idea is that you can build like a portfolio that covers enough of your living costs that you're actually independent from the need to work. So retire early is in it. I don't reckon anyone who really does FIRE probably wants to retire, but what it does is it gives you the option to do it.
Gotcha.
And it gives you a lot of freedom, right? The other thing it's called is fuck you money. Basically,
nice.
if you hit that level of thing where you can actually tell someone, I don't want to work here anymore because it's not right for me. So goodbye.
And is it trying to invest in things that generate you an income, or is it partly as well, okay, you could build up a portfolio. Yes, it's going to drip you dividends. So you've got some living costs paid for via that, but also you could draw down on it should you need to. Is that part of it?
Yeah, I think so. So like the dividends are nice, but personally I don't follow like a dividend seeking kind of portfolio. Often those dividend companies don't grow as fast, so they get you a nice income that you can live on. But if you, depending on your risk appetite, right? Like it might not be quite right for you. I'm like super high risk. I'm super aggressive. Like part of what I do is when I go into managed funds, I look at them, and even the aggressive ones aren't quite aggressive enough for me. So I've kind of I like those like kernel ones where that goes down the next layer down, and you can kind of pick the bands of the targets, and I basically pump everything into the aggressive stuff with a small amount in the.
And is that because you're just zooming out longer term, going,
okay.
Well,
my horizon, it has been that kind of 10, 20-year horizon. So I know in that time that it's really, really, really unlikely that with that amount of time and the fact that I'm probably not going to be in a position where I have to draw down on it during that time if the timing is wrong,
Yeah.
that I'm not going to suffer those losses. It's the data has, been going on for 100 years now, and it proves that, even if you're investing over the course of your life on the 4 worst days that you possibly could, you're still likely to get a return of like 4% or something like that after tax and inflation. So
just stay in it, go long term, dollar cost average.
Yeah.
It's once you study investing longer, you can either go down 2 paths of basically, I don't want to think about this much and I just want to do what is simple and actually I didn't realize it was this easy, or I'm going to hyper analyze it. I'm going to constantly be looking to refine it.
Yeah.
But I think for a lot of us, like, we're busy people doing other things, and our best investment's still generating income and focusing on how to do that. And I think that path A is probably the one that once you do start investing for a while, you realize you probably should be on that. But I reckon in those first few years, maybe even like 5, when you're getting more comfortable with investing, you just want to be on path B. And I think it's really interesting because I was thinking about this today, because a young fella sent me a message and he stacked nearly 30K by 21. And it might even be younger, but I'm thinking far out, like that is so much money to save by that age. And he's got it invested into shares. He's got a 90% simple return.
Yeah.
And I didn't even look at that until I went to post it. And I thought, that'll be the first thing that people look at. But the first thing I look at is how old are they and how much money they have and how much that could compound over time. I'm not really caring about but people message me all the time, like, what's he invested in? What's the thing? So by the time you're asking that, it doesn't matter because like they've had that market gain. So I understand the interest, but I guess again, it's like that path B where you're still looking for the shiny objects. But I often study people that have been investing for some time to see how they approach it. And if they're not trying to do day trading or finding the right things to get in and out of or managing their own retirements, so basically go back to, I'm going to focus on my life, my business, my family, and just go boring into exchange traded funds, accept the level of risk that I want, and then not have to think about it and put that thinking time back into other activities.
I think that's the way to go, right? It's like, it is pretty, as you said, it's pretty easy, right? You don't have to look at it all. And what I found is, like, I've been interested in it. So I've always I put somewhere between 5 and 10% of my investment in what I call my play money, right? And that is where I pick a stock or a theory that I then invest in and mostly lose money on as well. But the other side of it, it is set and forget. I've got that kind of auto invest set with my managed fund provider, and it goes in every week and adds to it and just keeps growing. What's been cool is, as I've switched from, working at a corporate job where I used to spend a lot of time, building dashboards to see how I'm doing and really caring about, what my compound annual growth rate was and trying to optimize that. As like I've got way busier doing the startup, I've kind of forgotten about it. And ironically, I don't look at it now. It's kind of just happening in the background. And when I do go look at it, I'm like, oh, that's pretty good. Like,
isn't that the whole point of Feijoa as well, right? Like, focus on your other stuff, let it do its thing for you, let the markets do their thing. Don't worry too much about it. And that's even the point where I got to, where I didn't even have like the Feijoa app almost, where I'm not even checking it. I look at my monthly summary that comes through via email, but I know it's just doing its thing in the background, and that's then building up my asset base. And, I'll probably, once the managed funds open up, I'll move away from KiwiSaver, but I wanted to get familiar with how it worked to start with. You mentioned a couple of times, which I think we should talk about just to give people some comfort, access to people's banking data and information. They might interpret that differently. Talk to us about like what that means, and then even open banking and what open banking's role plays in this, because we see those two words all the time, open banking, and no one really knows, I think, from what I've talked to, the everyday public, what even is open banking?
So Feijoa uses open banking, right? That's how we get access to the data and the ability to initiate payments to provide our service. I can get a bit to how that works from a technical level in a bit. But what it actually is so open banking is under it's called the Consumer Data Right. That's the bit of legislation that was passed. And the idea is that there's all these companies out there in various different industries, and banking was the first one they approached, or they took on, who have a lot of data about you. And so the consumer data right in open banking, that is a legislative reflection of that, the fact that that data is actually about you, and therefore you should be in control. So what open banking does is it allows you to say, hey, bank that's got all my data, I'd like you to share this with a third party, in our case, Feijoa, to allow Feijoa to provide me a service. So you, from a technical point of view, when you sign up to Feijoa, you go through a open banking flow, and that basically connects your bank account to our service. So with the big four banks and soon Kiwi Bank, that's like a really clean automated thing. It throws you to your banking app to authorize it, and you can put guardrails around, how much is coming out and things like that, which is all in control there.
How much data is coming out, you mean?
Payments as well, yeah. So but you control what data's going by what bank accounts you connect. You don't have to connect everything.
Yeah.
So that's how we kind of run our service, right? Because we're looking at the transactions you're making to calculate those roundups, and then we initiate a payment using those same open banking rails on the basis of that calculation. So what we do with your data, though, is we don't do anything with it at the moment. We're hoping to add value-add services with that data, and like the first one that's coming is our insights product. So that'll be opt-in, so we won't use your data unless you want us to. But you can opt in to us to basically take what information we can get from your transaction data and tell you where you're spending. So we can say, hey, in the last month you spent, in my case, $400 more on beer or whatever.
Yeah, it's a big month. Yeah.
And like this is a change. So, I can look at them and go, yeah, that was a busy month. I had to take some people out for a drinks. So yeah, that's fine. But then like, hey, you've also spent another $600 at the vet. And I'm like, what? I didn't realize my cat was that sick. So yeah. So those kind of things, just to kind of add a bit more value. It's something we can do with that data we've got. We've been trying to think about how can we add more value to people who are using our service. Don't want to be creepy though. I think that's the thing. So, we are making sure that it's all opt-in and
So I guess I'm picking up as well that with open banking, and I believe it's Akahu, is that right?
So yeah, Akahu's they're like the infrastructure provider. So we use Akahu, and what they do is they've built an API service that connects with basically every bank in the country. So there's the open banking in terms of the legislation. So that at the moment only covers the big four banks, and Kiwi Bank in the next month or so will be on board with that. And then for the rest of them, they've basically reverse engineered the mobile apps. So it's still secure in terms of you can revoke it from within your banking app rather than, and no passwords are stored and things like that. But Akahu have built that kind of process, which allows us to get into your bank account.
Cool.
Yeah.
Well, if anyone listening, especially on YouTube, for instance, the comments there, if you've got questions for Mark and the co-founders, feel free to leave those in the comments below. And I'm sure the team will keep an eye on them. Might even be suggested features. I'd imagine there's probably no shortage of suggestions once you get to 3,000 customers. Saying, hey, do this, do that. Hey, we want to see it do this. But a reminder that this is a fintech, which is a financial technology startup, effectively, building from scratch, and four guys basically bringing their idea into the world and the marketplace that we get to benefit from. So it's not like you're dealing with some massive beast that's got hundreds of millions and thousands of staff, but it's bloody impressive what you guys have built so far. I'm looking forward to seeing, how deep you take it.
No, it's been a heap of fun, right? It's the best job I've ever had.
Awesome.
Hardest job I've had, but best job I've had.
If people want to give it a crack, what's the best way for them to do that?
So we're available on both the app stores, iOS and Android. Just search for Feijoa, or feijoa.kiwi is our website, which is a bit more information about how the product works, some FAQs, chatbot you can ask. You can send things through to our WhatsApp as well. We usually get Ben, one of my colleagues, he's the one who responds to most of those messages, but sometimes some of the rest of us do as well. So
cool, nice and accessible. A few things then. So if there are people who potentially want to invest and meet those wholesale investor requirements, then reach out to Mark and the team. There may be an opportunity to do that at probably a $20,000 level as a minimum. And then we've got a giveaway. So if you are using Feijoa or have been using it or start to use it, then chuck something on your social media and tag Keep the Change and Feijoa. We'll both monitor that and we'll pick someone 30 days after the podcast has gone out to give people time to enter, and they'll win $1,000, and you can do with that what you please. And I think lastly, like, just have a crack at it and see what the technology's like. And hey, if you don't like it or don't need it or whatever, hey, sweet, you can always opt out of it. But as you guys develop, there's going to be more flexibility and usage, use cases that people are going to find beneficial.
Yeah, that's right. We've got a huge roadmap. We want to make saving as simple as spending. That's our vision, and we want to take away all those friction points for how you build your wealth.
Before we get out of here, mate, last one, predictions. So let's say, right, it's time of recording, it's 14th of May.
Yeah.
And we've got 3,000 active users, right?
Yeah.
And you've got, let's say, 600K that's been contributed.
Yeah.
Let's fast forward to the 14th of May, 2026.
Yeah.
Where do you reckon you'll be on those two metrics?
So I reckon 5 million on the contributions. We're at about 2.25 at the moment. We're probably more than that, actually. Probably more like 7 or 8.
Okay, you want to go 7 or 8? Yeah. Let's go 8 mil. So you think there'd be $8 million worth of contributions done? Yeah.
Yeah. And let's say 15,000 users.
15,000 users. That's a decent customer base. So 5x from here.
Yeah. So the whole reason Rising Capital is to get that customer acquisition going and cranking, telling more people about us and getting that word of mouth out. Yeah.
Fantastic, mate. Well, good luck, and don't burn yourselves out in the old startup world. If anyone wants to reach out to you guys, you know how to do that. You can do that via the website. Look up their WhatsApp as well. Drop them a line. You can probably find the lads all on LinkedIn as well.
Or flick me an email. I'm mark@feijoa.kiwi. So
easy. All right. Well, let's check back in a year and see how you're going.
Awesome. Sounds good.